The Monetary Council received the Governor's report on monetary and credit conditions in the Eastern Caribbean Currency Union. The report assesses the recent trends in monetary and credit conditions within the context of the bank's broader objectives of ensuring the stability of the exchange rate and exchange arrangements and the stability of the financial system. The key messages from the report were monetary conditions were assessed to have eased during 2016 as the money supply continued to increase. However, credit conditions tightened as reflected in the contraction in credit and the widening of the commercial banks' weighted average interest rate spread. The exchange rate anchor remained stable and strong throughout 2016, supported by adequate foreign reserves. Exchange rate stability underpins monetary stability, thereby sustaining the confidence necessary for economic activity. And consistent with the global and regional trends, real output growth in the ECCU stood at 2.6% in 2016, compared with 2.8% in 2015. Having considered the monetary and credit conditions in the ECCU, the Monetary Council agreed to maintain the minimum savings deposit rate at 2% and maintain the central bank's discount rate at 6.5%. The minimum savings rate is the lowest rate commercial banks can offer on savings deposits. The central bank's discount rate is the rate at which the ECCB lends to commercial banks. In respect to financial sector stability, for the year 2016, the ECCU financial system was assessed as stable, and the resilience of the financial system to potential adverse shocks strengthened, and major risk to financial stability in the ECCU diminished. However, the banking sector continued to be challenged by structural vulnerabilities, including correspondent banking relationships. In keeping with its goal for maintaining financial stability, the ECCB would commence publication of a financial stability report annually. The report is aimed at identifying risk and vulnerabilities in the ECCU financial system, assess the resilience of the financial system to domestic and external shocks, and provide information on the soundness of the financial system and the various initiatives that regulators and governments are pursuing to mitigate risk to the ECCU financial system. And of course, as you know, the citizens of the Monetary Union have been raising concerns about bank fees and high bank fees and the varied types of bank fees. And what we have decided to do on the recommendation of the central bank is to publish the fees and charges for commercial banks by territory. So this will be placed on the bank's website. So in the case of, say, St. Vincent, all of the banks in St. Vincent, the fees, all of the charges will be posted side by side. So discerning clients of the banks can study them and make informed decisions on their own banking practices. In respect to fiscal and debt sustainability, the combined overall surplus in the fiscal operations of the ECCU member governments rose to 321.4 million at the end of 2016. That is from 107.8 million in 2015. The regional debt to gross domestic product, which was 79.3% in 2014, declined to 73.3% in 2015, and 72.5% in 2016. The fiscal position of member governments is expected to continue to strengthen. Gains are expected in tax and non-tax revenue as economic activity increases, and the citizenship by investment programs, once investments proceed apace, then we will see continued positive results. I will now pass on to my colleague, Honourable Gaston Browne, the Prime Minister and Minister of Finance of Antigua and Barbuda.
Thank you very much, Mr. Chairman. Members of the press, I've been asked to speak briefly on the issues of growth and competitiveness, as well as the proposed legislative reforms. The Eastern Caribbean Central Bank hosted the inaugural ECCU Growth Dialogue with social partners on the 1st of March 2017. The dialogue sought to create a unique opportunity for social partners to engage the Monetary Council on the issue of economic growth and to forge consensus on a plan of action for addressing growth, competitiveness, and employment within the ECCU. Now, we discussed a number of issues affecting the region, issues that impacted on growth, and there were a number of proposed strategies to deal with the various issues. So, for example, we looked at the whole issue of entrepreneurship, the need to increase entrepreneurship within the region, and to provide the appropriate training as well as funding mechanisms to support increased entrepreneurship within the region. And some creative ideas to include venture capital funding, crowdfunding, as well as angel financing were considered. And we also looked at risk affecting the region, to include de-risking, and a number of strategies were also recommended by the social partners to address those issues. It was agreed that the forum should be institutionalized and that we should ensure that there is consistent dialogue between the various stakeholders. Now, in keeping with its commitment to the implementation of the ECCU Growth Action Plan, the Monetary Council endorsed the collaboration between the OECS Commission and the Eastern Caribbean Central Bank on the implementation of an ECCU Growth Action Plan. It also agreed to recommend that member governments appoint a focal point to coordinate the implementation of the Growth Action Plan, and agreed also to support in-country consultations in conjunction with the OECS Commission and the Eastern Caribbean Central Bank on the Growth Action Plan. Council also agreed to urge commercial banks to increase lending to the private sector in an attempt to spur growth. We've seen a consistent decline quarter after quarter, year after year for several years in the amount of credit. And as we seek to achieve that minimum threshold of 5% growth in our respective countries, Council is encouraging the commercial banks to increase their lending. We're not suggesting now that they should take on unnecessary risk, but to take on prudent risk and to manage their risk and to ensure that they grow their portfolio. Because at the end of the day, there's no such thing as a shrinking successful institution. So we encourage the commercial banks to increase their lending to the private sector in an attempt to increase growth within the currency union. Council noted with increased concern the difficulties with payment settlement of traders selling agricultural produce to Trinidad and Tobago. Council further noted that the Eastern Caribbean Central Bank has submitted a proposal to the Central Bank of Trinidad and Tobago to resolve this issue and expressed the view that a resolution has to be found to this matter. Council urged that this long outstanding matter be resolved expeditiously. In the meantime, the Council member for St. Vincent and the Grenadines updated the Monetary Council on a solution that his government is advancing. And again, a number of creative ideas have been looked at, to include the possibility of both central banks holding some level of currencies of the respective regions or territories, so that the central bank, Eastern Caribbean Central Bank, could possibly hold some TT dollars, and the Central Bank of Trinidad and Tobago could hold some EC dollars to ensure that they can exchange currency to facilitate trade. I've been asked to speak briefly to the legislative reforms. At its 86th meeting held on the 21st of October 2016, the Monetary Council approved the establishment of a ministerial subcommittee of the Council, chaired by Council member for St. Vincent and the Grenadines, to lead discussions with stakeholders on the proposed amendments to the Act and to facilitate the process through its enactment. To this end, a consultative and legislative drafting workshop was held on the 11th of April 2017 in St. Vincent and the Grenadines. ECCU, Attorney Generals, Parliamentary Council, Financial Secretaries, and other representatives of the Ministries of Finance, representatives from the ECCU's Bankers Association, local banks associations, and representatives of the ECCB attended the workshop. The team discussed the policy issues related to the amendments, the concerns of the banking industry, and reached consensus on the draft amendments. I may add here that the amendments do not change the substance of the Act, but would have provided some clarification on various issues. The Monetary Council approved the amendments to the Banking Act 2015 and agreed to urge member governments to secure the passage of the amendments to the Banking Act 2015 by December 31st, 2017. Final issue here is that at its 85th meeting held on the 22nd of July 2016, Council took the decision to recommend to member governments that the legal responsibility for anti-money laundering and counter-financing of terrorism, AML-CFT, supervision and regulation of financial institutions licensed under the Banking Act, be transferred to the Eastern Caribbean Central Bank. The Monetary Council therefore approved the proposed areas of amendment to the anti-money laundering and counter-financing of terrorism legislation, AML-CFT legislation, in Anguilla, Antigua and Barbuda, the Commonwealth of Dominica, Grenada, Montserrat, St. Kitts, Nevis, St. Lucia, to transfer the regulatory and supervisory authority of AML-CFT for institutions licensed under the Banking Act to the ECCB. And emphasize here, referring to institutions licensed under the Banking Act, they will be transferred to the ECCB to cover AML's CFT supervision. St. Vincent and the Grenadines was not included because they have already made the necessary changes to the law. Thank you very much, Mr. Chairman.